All right, so welcome into the live stream today. We're going to dive into what could be a very interesting aspect around stablecoins and what algorithmic may be doing to the market overall. There's a lot to talk about here as we take a look at kind of a deep dive on Tron, as well as some other market conditions that a lot of you really are probably going to be watching very closely, because this is going to have a lot of play into how markets and liquidations, all those kind of things will work out. My name is Paul Barron. Welcome back into TechPath. Let's dive into it today. A lot of this has been, I feel like, triggered to a certain extent from what has happened with Luna UST and kind of the ongoing saga that we continue to report on around Celsius. If you look at this first story, Celsius withdrawal halt reveals some run risks on other crypto banks. Now, this is an issue that is being brought up across the industry, and it should be, because we are in a fairly significant downturn with not necessarily blue water out on the other side, meaning we've got a lot of macro pressures, economic woes that are putting a lot of pressure within all asset classes, including crypto. So with that being the case, the next question is going to be kind of, where does the other shoe drop? And many people are looking to many different exchanges, as well as other crypto style banks, as potential risk ventures. So this is something that we'll continue to look at here, but I wanted to focus in on what Blockworks was saying here. Cryptocurrencies related equities continue to tumble. Industry participants are obviously questioning how crumbling of crypto leading platform Celsius might impact on the asset. Elsewhere, certainly we could see some contagion. This is kind of where he talks about where other banks and other entities that are doing exactly or have similar business models to Celsius could start taking some of the heat as well. Monday morning crypto exchange Binance, we saw this pause Bitcoin withdrawals for about 3 hours. This one was a little bit of a nothing to see here kind of thing. I don't necessarily would believe, or I'm not questioning whether or not they were truthful. I'm just saying some of the technical aspects of it, there's been much reporting around whether or not there was a glitch in the Bitcoin application outside of what Binance was trying to do to just run through. But for them to take that kind of move there was a little speculation around it. It's still very questionable as to what happened there. May have been just a system, glitch that Binance was coming, even though we have not seen that kind of scenario. We have seen intentional slowdowns of networks when we see volatility. That has occurred. And I think maybe there was something brewing over at Binance that maybe they wanted to kind of put a thwart on. But anywhere, interesting there, just like this was happening in stocks, there'd be houses like Fidelity, TD Ameritrade, et cetera, having problems with too many people in the system. This is kind of what he's talking about, too many people doing things that causes backlogs. That could be the case for sure. And, when you do have these kinds of scenarios happening in markets, which we're going to see in a lot of different markets, including the real estate business. I mean, you're going to see this across mortgage industry, obvious, the securities, and even to a certain extent, some of the aspects around bonds and a lot of securities that are trading. I think with crypto, it just becomes, because there's so much of people that are drinking the Kool-Aid here when it comes to crypto, that this is getting highlighted in a big way. Is BlockFi next? Is Nexo next? It really kind of depends on how liquid they are. Again, all of this is speculation. And this is something that we talk about here on the channel a lot. And it's one thing that you guys probably understand with me is I try to downplay this stuff as much as possible, because unless you've got investigative journalism, and today even CoinDesk ended up getting slapped for some misreporting on scenarios around UST, and also with what Do Kwon's activities were. And that's the point, is that until you've got a little bit more data, a lot more information, which in most cases in blockchain is available, you just have to do the work to go out and kind of retrieve it. You have to be cautious on how to go in this direction. And that's kind of what we're doing. Even today, when we show you, there's a slide I'm going to show you that breaks down what's happening with Tron and with USDD. And I think when you look at that, this is widely open, available information. It's just how you decipher these things. Let's get into another story here. Tether Celsius crisis has no impact on USDT reserves. This is a question that I think a lot of people are asking. Is Tether safe? So they issued a statement on Monday regarding major cryptocurrency platform halting withdrawals. According to the statement, activity on Celsius, we've always been over-collateralized. This, of course, still is a knock on Tether because of the type of collateral that they hold. And the company in the issue of largest stablecoin pegged to the US dollar, still a 1-to-1 ratio is what their claim is. At time of writing, USD's market cap amounts to 72 billion. This is significantly larger than USDC. So again, they're still the monster that is in the market right now. And when you look at the overall size of Tether and what that might even initiate to, I don't necessarily see a threat yet, but I am concerned about what we're seeing happening around Tether. Could there be enough of these smaller dominoes like Celsius to drop that could impose a little bit more will on Tether? In 2021, Celsius reportedly borrowed $1 billion from Tether with Bitcoin as its collateral. This, of course, was via CEO Alex Mashish said that Celsius was paying an interest rate between 5 and 6%. Tether is also known as an early investor in Celsius, contributing about $10 million in equity investment. Nothing really when you look at that overall. So, but $1 billion in Tether from a Bitcoin asset reserve, that is something to be, looked at for sure. Lots happening here. This, of course, was kind of just Nate Anderson talking about this, Celsius CEO, the day before the collapse. This was just showing some of the things that he was saying. And this goes back to their, kind of this tit for tat that they were having around Celsius. And this goes back to my whole analysis before when we did the video yesterday, is that some of this could be self-imposed. Some of this could be the FUD that started that, snowball effect running, and it just kept going. And essentially we had kind of the after effect of what is going on with Celsius right now. All of this, though, starts to put a lot more pressure on these stablecoins, I think, outside of maybe USDC. Celsius feeling impact of market volatility, Tether reserves hold strong. This, again, for just to have to say that your Tether reserves are holding strong for an issue like Celsius, to me, that's a pretty amazing statement, because if you think about just the industry, the stock industry, if a stock, even one like someone like a GM, because I wouldn't necessarily call Celsius the Tesla of what's happening out there, but if you had one of the majors or a major tech stock, maybe a Facebook, a Google, those kind of scenarios can start to cause market waves. But these smaller ones, I just don't see them causing any kind of initial issues. This would have to be a model of multiple dominoes starting to really kind of apply pressure into Tether. If you look at their reserves breakdown, this is where it gets, and this is something we've talked about before on the show, is other investments. This is digital tokens. So my guess is all secured loans right here, none to affiliated entities, corporate, notice they have to state that. That's interesting. Again, not regulation. Corporate bonds, funds, and precious metals right here, a very small percentage. And then cash and cash equivalents and other short-term deposits and commercial paper. This, to me, I think has to be the bigger one. They, of course, break it down here for non-treasury, U.S. Treasury, reverse purchase, cash deposits, cash and bank deposits, money market funds, and then commercial paper, which is the big one to me, commercial paper at 28%. And then, because really, treasury, reverse agreements, cash, this right here is fine, 60%, but this 28% right here is the question mark, again, that would be looking at the overall asset reserves of Tether as it starts to look into its stability and over the next few months. Algorithmic stablecoin USDD, this is, of course, Tron, claims 102% TDR collateral reserves, about 14,000 Bitcoin, 140 million in USDT, and about 1.9 billion Tron. But the Tron goes into a burn address. Thus, why is burn Tron counted as collateral? That's a question. Kind of what could go wrong with these algorithmic stablecoins. We're going to break this down for you too, because there's a lot happening here. If you look at where they are right now, this kind of breaks it down on their total collateral right here. And I want to show this to you right here. So there you've got Tron right there, Bitcoin 14,000, USDT at 140 million, and then USDC at about $1 billion of this authorized $2 billion. So when you look at that on broken out aspects and you kind of start to analyze what's happening around Tron and USDD, things get a little interesting. Let me show you a chart here that we prepared real quickly. So this is the USDD asset with sentiment analysis and the breakout based on US dollar value. Okay, so you've got USDC sitting there in the blue at 47%, Tether coming in at 7%, Bitcoin at about 16% in US dollar value, and then Tron, which remember this asset is down 30%, is 30% of this overall value of USDD. So you take that along with what's happening in the sentiment side of things, looking back at our own Crypto Power Index data, April 72, which is pretty decent. Back in April, that was, no markets where we weren't dealing with Luna, we weren't dealing with all these issues with Celsius. May starts to get really shaky. And then of course, here we are in June, and now we've got a real problem with declining sentiment on Tron, and that being one of the big issues here of how this may end up playing out and how this could be a problem for USDD. Again, here's the Tron DAO reserve, kind of breaking down their overall assets on Tether US supply, Decentralized USD supply, USDC, and then Tron USD, and then the Just stablecoin. Again, these are in the DAO reserve. So this gets a little bit concerning in the overall. You look also at the overall market. Sinking Tron takes DeFi total value locked into US around 63 billion, which is the lowest since April 2021 last year. So again, another scenario could be a red flag for these kinds of issues. And I think this is one of the things that we've got to really kind of concern ourselves. Remember, Tron founder Justin Sun, there was a couple of tweets. If you guys don't follow Fatman on Twitter he kind of has gone back and forth with head-to-head with Do Kwon quite a bit. And he put up a couple of tweets not too long ago that really kind of showed the variation between Do Kwon and also Justin Sun of them deploying capital into some of these algorithmic stablecoins. So here again, Tron founder Justin Sun tweeted, short sellers are betting against digital currency. The DAO reserves deployed 2.5 billion in overnight to defend the UST. This sounds like a repeat for what was happening with Luna and with UST. So again, total value dwindled to 4.5 billion. A larger DeFi market, TVL, has sunk to the lowest level since April. And then we've still got USDD still trading below its peg, which again gets it back into the scenarios. Could we see a peg or a depeg really starting to brew here, especially with you look at the pressure on Tron, which is 30% of that asset. So it is something to consider as we continue to lock and really take a look. Here it is right here on DeFi Llama. There's the 24-hour change down almost 30%. And this gets back to total value locked in US dollars. I think it's a scenario that we're going to have to watch many of these projects and many of these stable coins, especially algorithmic side of things, much closer. Here is another scenario that's kind of interesting. This is the Fatman Terra account I was telling you about. This is an interesting statement. Has USDD burnt locked collateral been hard-coded to display the fully backed USDD supply despite the falling price? Is what his speculation is. So USDD supply at 723 million. Coincidentally, a pricing bug shows the burnt collateral to be exactly worth 720. So even though it's worth 624 million. So do you understand what's going on here? Is with those kinds of transparency websites, sometimes you have to question even those and go back and look at the valuation, which is what we did on breaking those out. But if it's giving you hard-coded data that's not fluctuating with the actual market valuation, that's where it gets very interesting as this moves forward. Tron founder Justin Sun announced his plan to deploy another $2 billion to defend the USDD peg as, of course, the markets plummet. Again, this gets back to my point of if we see more and more of these kinds of activities, and remember, these are domino effects, house of cards, so to speak, but there are some safe havens here within these. And this is happening and can happen in all markets, real estate, traditional securities. The key here is making sure that you're paying attention to what's happening in the market itself, for sure. Remember, these are not investment advice videos. The key here is they are market movers. The idea is to get you guys research, data, insights that our research is providing, and then give that out to you, hopefully so you guys can go out and really dive in to some of these assets. Because some of these things may make no difference to you because you're a Bitcoin guy or an Ethereum guy or whatever it might be. And a lot of these kinds of scenarios don't even apply to you. So it kind of just depends. But if you are looking at the overall value of the market, this is something to be keeping a close eye on, because this could have a ripple effect. To safeguard the overall blockchain industry and crypto, Tron DAO Reserve has increased 650 million USDC supply on Tron. Currently, USDC supply on Tron is 2.5 billion. This is, again, this just reeks a little bit. So I'm a little concerned on this one as I continue to break this one down. Here's another one. For the current market extreme condition, another 500 million USDC. So now you're at collateralized at 310%. Then they continue on. Here's Justin Sun prepares 2 billion for the Tron short squeeze. Binance currently has a huge negative funding rate on Tron right now. And again, if you don't understand these things, this is where we get in kind of the weeds on how funding rates work, how shorts work, all those kind of elements. What you want to look at here is the impact on these stable coins, especially algorithmic, because of, remember what Luna was able to do. Luna was like a small, baby elephant. Tron is an elephant, if not, a massive mammoth. So its play, USDD, into it is one step up the stablecoin chain into things like Tether, which essentially is the mothership. I want to break down a couple of videos here that we had with Steve over at Voyager and his references on USDC. Let me play this for you. All right, sorry I don't have that one. They're going to bring in that audio real quick. But what we did was with Steve, and if you guys have not checked out the video, by the way, make sure and get your questions over on the side and hit like on the video right now. If you guys want to take a look at these kinds of analysis where we're breaking down some of these things, because this does have these really kind of these domino effects on the industry. And in my opinion, start to really dictate to where asset movement is going to go. So be thinking about that. Give me your questions. I think we got this video back. We're going to try to get some audio right here.
Up into the point of swipe. You don't even have to touch dollars. So I have direct deposit. I put some of my paycheck into my debit card, and when that cash comes in, automatically converts to USDC. I can go spend that USDC. Nothing else to do. It's seamless to the consumer. You're holding that USDC 9%. That's exactly how we're building all our other products, whether it's the equities and options trading, whether it's going to be credit products. Everything's going to be built off of USDC. To the beginning of our conversation, we think it's the only true stable coin. I know I'll get arguments from some others, but I think it's truly the only true stable coin. And we're building our ecosystem off of that so consumers can earn rewards.
Yeah. UX. All right. So what you saw there was Voyager talking about how much they put into USDC for validity for their own platform. So, and this is one of those scenarios that, and a lot of people have looked at Voyager as also potentially getting some, effect because of Celsius. And there are some partnerships. A lot of these companies work together with many different exchanges. And in many cases, because they're leveraging assets or using on DeFi, they've got a lot of the partnerships are integrated in. There's a lot of that happening. This happens also in traditional markets between trading houses, quite a bit. So for them to be so in on USDC, remember USDC is still a very small part of the stablecoin ecosystem. It is a big part, but it is much, much smaller than, say, a Tether. And when you look at the overall market play in that. So I think for them to be on this, I've got another clip, and being just so dedicated to what USDC is. There's a lot of kind of read between the line stuff happening here for sure. Let me jump over here to this next clip right here and take a listen to what he says here.
I think the aspects of that bill that talk about this and customer assets are important. And I think we're going to get to a place where customer assets will be segregated. And I think that was the lead. And a lot of this topic came up because the SEC in the March quarter said, hey, to public companies that if you are holding customer assets, you need to put it on your balance sheet so consumers can see what you are actually holding. And that's where this all came about. But at the same time, they allowed crypto exchanges and brokers and platforms to mark to market those assets, where before they were treated differently under accounting standards. So they took the two together. I think the value of for us being a public company and already having done that is consumers see that their assets are there and our financials are reviewed.
All right, so what he said here to me is a very important process that not only the SEC but also regulation is going to do with stablecoins. And it's the thing that many people have been talking about, regulation on stablecoins for the last 6 months. The likelihood is I think we're going to see this ramp up quicker. Obviously, if we see any kind of threat to USDD, the issue will continue because we'll see pressures on USDT start to play into this. But some key things he's talking about here is FDIC insurance, which is your US dollar, much like all your banks. If you deposit into a handful of exchanges, many people don't know this, but you have FDIC insurance because in many cases the depository is related or linked to a traditional registered bank. So USD, meaning dollar, still has the FDIC insurance. The key here is when USDC starts to commingle with that, that is going to get very interesting. And I was talking to him about this whole debit card analysis because that's when, if USD can go into a debit card without having to make a transaction, you have now created base money. And that is a very, very important component into the evolution of where crypto adoption needs to go and how it will go there from the masses. Getting back to stable coins, especially that are earning what USDC and others have seen, and that is anywhere between, we've seen it as low as about 3%. Some, of course, pay less, but for the most part, you'll see about a 3%, all the way up to, in some cases, 9%, depending on your holdings. So a lot of factors around this that really kind of move into this. Don't forget, guys, like the video. We love to get your feedback because these are the kind of things that, first of all, if you like these kinds of videos where we'll go really deep dive into not only what's happening in markets, but really breaking down some of the analysis, do some research, do some study within it, give you some sentiment data. If these are the kind of videos you like, versus maybe analysis or CEO interviews, I'd love to hear your thoughts on that. Make sure and drop your questions in over in the sidebar. If you're watching this after the live, make sure and comment below. All right. So here's another scenario. Ripple competitor and MoneyGram rolls out a zero-fee money transfer service using, again, USDC. So, and this is not a commercial for USDC, just so we're clear. Circle is not a client of ours and not an advertiser. So the point is that USDC, I continue to be, this is one of my, it is my stablecoin of choice. It's the one I use all the time. But the fact that we've got MoneyGram now playing into this, especially at no fees, this really gets very intriguing because remember, MoneyGram, Western Union, along with Ripple, overall, there's a lot of money that is moved cross-border payments via these systems, in the trillions. So we're not talking about small change here. And the fact that we're starting to peg against, not really peg, but utilize an underlying asset, USDC, gives me faith in what's happening in digital currencies, but also more importantly, what's happening in the crypto markets. Let's take a quick look at, what a stablecoin should look like. Here's your 1 month chart on USDC. You can go to your 3 month. And then let's take a look at where Tether is. This is your 1 month on Tether. There's your 3 month on Tether. So you've got two problem areas. Of course, this occurred during the outage with Luna. And then now here we are again, starting to see some activity on Tether, which again starts to concern. You see this kind of 7-day move, especially in what we've seen over the last 7 days, market capitulation. We've got potential issues with liquidations, and we've got a scenario coming and brewing across the line in terms of some pretty major companies taking some very hard hits right now. So this is the thing you got to keep an eye on. I know we're going to jump to some polls here pretty soon. I think we've got one coming. Before I get to the polls, though, I want to jump over to a couple of clips that came over from the Bankless YouTube channel. If you guys don't and have not subscribed to Bankless, those guys do a really good job. But this is Kevin O'Leary, and he's talking about what this might look like as regulation starts to roll in. Let's listen to this clip.
And I'm just one voice, but I try and say this over and over again to policymakers is, let's pick one thing. I mean, the crypto universe is so broad, it's so huge, there's so many different things going on at the same time. Let's bring policy on one thing and get that done. And what I'd like that to be is stable coins, because as a payment system right now, it would be very, very productive to bring forward some policy on stable coins and let the market compete. Now, I personally prefer ones that are backed by hard assets like the US dollar, but there's many ideas out there. Some work, some don't. Obviously, what happened with Luna was a bad outcome, but that's okay. This is a nascent industry, and we're trying different ideas, but the need for an international payment system is so huge and such a huge opportunity to save costs, to provide transparency, auditability, liquidity, speed, all of those things. That's what I'm suggesting. Let's pick one thing.
All right, so what O'Leary's talking about there is kind of what we're kind of getting at, is that there are some potentials here for regulation to kind of lead the crypto community out of the kind of this barren zone that we're in the essence of what it can do for more of the global good. And I think what he's trying to do is get into a stablecoin that can be utilized mainly due to being able to transfer large amounts of wealth, internationally and within even domestically. But all those kind of things start to play into this, because this does roll into all sorts of transactions if a stablecoin does start to kind of flow into this. Now, I don't necessarily know if there are many projects that are as mature. There will be others, but are as mature as what we're seeing with USDC. Now, again, USDT is still being looked at as a potential of what this could look like if regulation came in. It could be a two stablecoin race at that point. Algorithmic could really kind of get eliminated from all of that kind of scenarios. Let me take a look here at the chart here and take a look at overall market cap. So you can see market cap running in. Let me kind of zoom in on that real quick on USDC at 54 billion. If you take a look at where Tether is holding on market cap, also right there at 71. So you've got an interesting scenario brewing here with where both Tether and USDC are potentially poised right now from both a positive and a negative position. So I think the key here, as we continue to roll this out, it's going to be interesting to see how all of this starts to affect, especially with the fact that we're seeing things like Celsius, and we may see a handful of others. And if you listen to some analysts and also a lot of the YouTubers out there that follow this space so heavily, is many people are expecting other majors to run into difficulty. And liquidations are probably going to be the biggest one. Now, we're going to do a video specifically on liquidations coming up next on our live stream. So stick around that one for sure, because it's going to be a big one that really breaks it down on where liquidations could occur and what that might mean to the Bitcoin price. So make sure and stay tuned on that one. Let's jump over to some questions. But before we do that, I want to jump into a poll real quick. All right, so is Tron's USDD the next Terra? Oh, man, you guys are way up on there, 80% as either yes or I'm not quite sure. This is a concern right now. Again, would we see this as a big hit on the overall market? I was still am surprised at how well the market has absorbed Luna, UST, and then also the Celsius debacle that is brewing right now. The market, in essence, has dealt with it fairly well, even though we're under $1 trillion. I think it has dealt with it when you think of what and how it does give you the strength in what crypto is. It's not a fragile, small asset class any longer. It's a very robust community, and I think it's going to continue. All right, let's go in here and jump into some questions. I love it. Michael, Kevin is a paid puppet for Bankits. I think in general, if you know and really kind of follow O'Leary, he has jumped in and done kind of an about face. I remember the original clip that went around when he and Anthony Pompliano were on, I think it was CNBC or one of the the major news outlets, and he was very surprised that Pomp was so far in on crypto. And maybe it one of those things that maybe he did come to light, but you're right. They're always read between the lines. Michael, let's get to it. What happens if USDT goes down? That is the mothership that we don't necessarily want to see happen. That would be a major, major blow to the industry. Now, would it recover? Absolutely, I think over time, but it would be picking it up from the ashes. That would be one of the scenarios that could be a monster. If I can transfer USDC, then why do we need MoneyGram? Well, remember, not everybody's using crypto wallets. Not everybody's using exchanges. So remember, you guys are the 1%ers in the financial community, less than 1%ers. And you understand this stuff. You understand how wallets work. You understand how exchanges can be utilized to be able to move money in and out, all those kind of assets. But a lot of people aren't there yet. So those kinds of, and the masses won't be there for quite some time. If we get to a 10%, overall adoption rate in the next 5 to 10 years, that's huge. It would be unbelievably huge. But you still are dealing with about 70 to 80% of people that around the world that need to be able to transact in other ways. Okay, so did you see Vulcan? Was Vulcan have a stablecoin? I saw that. Again, I think we're going to see some pylons here with other assets that are going to be utilized to create. There's ideas out there. I'm not saying they're bad. They're good. I do think we will continue to see some stablecoin development because it's a needed solution, especially in times like right now. And it's also why you're seeing a lot of people going into safe havens there on stable coins and then holding in on those top tier blue chip assets. So for sure. Freddie T, I was affected by Coinbase Pro lockup before it was widely known. Last 2 weeks I've been having major issues with withdrawals and being in Coinbase Pro sub was no help at all. You think Coinbase is in real trouble? Interesting one there, Freddie T. I would say this, and I can't indicate that. Could it be? Sure, there are always indicators, but almost every major exchange, with the exception of a handful, still require you to do those wallet verifications. Sometimes it's 24 hours, sometimes it's pretty quick. It just depends on the platform. Coinbase had not been doing that. So for them to do that, is it an indicator? Is it a concern that there's a lot of liquidations, not from the sense of people just getting liquidated due to their asset, but people that are liquidating their accounts and starting to move into dollars? So that's a real question that I think a lot of people are starting to look at, but still up in the air on that. Opinion on Crow. Again, crypto.com, they're one of the ones that uses 24-hour whitelists for wallets. So we don't analyze Crow all the time. We'll do sentiment analysis on those occasionally. On the exchange tokens, we track FTT, Crow, VGX. We were tracking Celsius. We're still tracking it, but it's in such dire situation right now. USDD will be fine. Okay, they're not worried about U.S. regulatory concerns. Why would they? I'm not worried about regulatory concerns. I'm worried about liquidity. Liquidity is really where that one boils down to. What exactly does amplification refer to? So amplification and sentiment is a data set that we use in our own analysis inside our crypto power index. Amplification is looking at leading indicators of how people are talking about, basically the network effect, talking about a particular asset or keywords. That's how we measure amplification. In many cases, it gives us a little bit of an insight, usually a handful of days to a week of insights on a trend that may be developing, both positive or negative from a sentiment standpoint. Chris Plashak, Coinbase and Robinhood are publicly traded, already subject to some oversight and regulation, for sure. Again, just like what Steve was talking about from Voyager, is they're another publicly traded company. There's a lot of regulatory things that are already pushing them down the rabbit hole, so to speak, of having to regulate a lot of the way they move and do things in business. So many cases there. Concern with USDC, is it made or owned by Coinbase as I trust, and have they had issues being transparent on their backings? Is it made or owned by Coinbase? USDC is Circle, which is a completely different entity than Coinbase. Now, granted, Circle is mostly invested in by Digital Currency Group, which also invests in Coinbase, but that's the mothership of all investments in crypto. If you look at Digital Currency and the amount of investments they have in the space right now, either investments and or acquisitions, you'll see, I would say, 150 companies within the crypto space that they're involved in some way, including CoinDesk and many of the media outlets. So there's a lot happening there. Duval, is ADA becoming a safer haven now than ETH and Sol are crashing? I don't know, because Cardano has still, been in a little bit of a downtrend here. So I don't necessarily believe any one of those are safe havens unless you're looking at long-term holds. And then all three of those projects most likely are going to be performing for quite some time in the next 3 to 5 years. So again, or even in the next 18 months, we're going to see a resurrection of where the market is going. We've got the halving coming. That eventually will start to drag up the market. All we need to get into is the macroeconomics starting to show uptrend potentials here. How is Tron bigger than Luna UST in comparison? It's, I think, overall asset qualification is what we're talking about here. Now, 65 billion definitely is a scenario, but again, the key here is are we going to look at more of these kinds of things, Tron USDD, start to being a factor here to cause other kinds of things that could happen on these kind of domino effects. This is the biggest issue that we're looking at. Stefan, Ape or Sand, Mana or Axie? Ape or Sand? Sandbox. If I split it into two, I would go Sandbox Axie. But if I only needed one out of those, I would probably go Sandbox. All right, Jason, you want to over collateralize in worst case scenario. Realistically, if you were Bitcoin collateral, you would want to be around 25% for sure. Even if Bitcoin fell to 10K, yeah, for sure. Over collateralized, especially on loans, is the case, which is one of the things that is happening right now with liquidations. There are a lot of loans out currently that we are getting very close, if not already past. It's really what really kind of drew Celsius to the table and caused what we're dealing with right now with Celsius. Aussie Crypto G, I think you over collateralized by at least 400% account, may vary. Seriously, 30% of Tron USD is based on the value of Tron. Yeah, in a bear market, no one else can see a major red flag. Yeah, for sure. It's more than enough collateral. It's 100% over collateralized. Don't know. I still think this one is a question mark for sure. Not enough collateral. Moved all my USDT over to USDC. That was a big move. Don't trust Phantom. Okay, well, there you go. You guys are a little cynical today on these, for sure. I think in these markets, though, what you're dealing with is speculation and concern in many cases. But remember that in markets like this, there are going to be a lot of scenarios that I think start these snowballs running and can get out of hand. The key here is just to be aware. And the way to be aware is keep yourself educated. Make sure you're jumping into the right communities. One of the ways is jumping into the Diamond Circle. You can do that absolutely free. It's easy. Just jump in. It's basically an email that we send out a few times a week. Sometimes we'll drop in CPI data in it that we don't release here on the channel. A lot of times we'll do AMAs that never make it here on the channel. And then we also do a lot of catch-up videos, so you get a chance to catch up on things you might have missed. So make sure and, of course, do that. And make sure, stay tuned here because we're getting ready to go live on a big video on where and how liquidations may be happening and affecting the price of Bitcoin very soon. So if you want to catch me, it's out on Twitter, @Paul Barron. We'll catch you next time right here on TechPath.